Hello, everybody, and a very, very warm welcome to this JPSB seminar. It's a virtual webinar. We've got guests all over the world who've dialed in for this, and it is just such a joy to get into not only a topic like this, but to also be hosting an event with such an esteemed panel. If I may, just very quickly, my name is Julia Streets, and I'm an entrepreneur in the world of financial services, and this is something that I think about a great deal because I work with firms from small fintechs to some of the world's largest financial institutions. Navigating COVID, thinking about systemic and systematic and technological change is what is occupying many of our minds at the moment. And we're really going to get down into a discussion about what are we not paying attention to, what should we be paying attention to, what are we at risk of overlooking, and of course, where are those common areas that we should be tackling as well. The reason why it's important now is, of course, because everybody's seen unprecedented change. And thinking about how we work culturally as well is really front of everybody's mind. So many of the impacts and the lessons are evident, but we've been considering a range of the less obvious impacts and concerns, both for the industry and ourselves. Now, you may be wondering, why is JPSB hosting this webinar and why now as well? And so basically, just to tell you a bit about them, if you don't know them, it's an independent investment management and technology consultancy, well established, continually expanding, with teams led by some very senior specialists. They're specializing in helping investment and trading firms adapt, evolve, and grow by harnessing and unlocking the potential of trading and investment corporate technology. So what better people to host the webinar, and also to have invited such an esteemed panel as well. Now, I would normally invite the panelists by introducing them from highlights from their biographies. But what occurred to me when I very first met them in preparation for this is they have incredible stories themselves. So actually, I'm going to hand this over to each of them to introduce themselves. So Joanne Marlowe, can I come to you first of all? Take us through, who are you, and tell us about your road, your journey with transformation and change.
Well, thank you. And thank you very much for having me today. As Julia just said, my name is Joanne Marlowe. I'm the founder and CEO of UFT Commercial Finance outside Chicago. Our firm was built on the heels of the 2008 meltdown. So what happened in the last 15 months here with COVID is really not such a strange set of circumstances. We were born out of adversity. Essentially, we created a product called the CPC, the Master Credit Participation Certificate. It's an alternative asset class, or I should say new credit asset class, that was designed specifically to respond to essentially what was the frailties of the marketplace, the credit marketplace in particular, that was shown really quite magnificently displayed for the global marketplace in 2008. We began building our firm in 2009, and took us 8 years to introduce the product that we have since brought to market. And essentially, it's all about creating a more resilient, a more transparent, a more dynamic, and most importantly, more liquid credit marketplace. And not a small task, but it's been what we chose to focus on. We got a great small team in Chicago that does the job, and really looking at 2021, ironically, on the heels of COVID, being really a gateway issue for us as far as really getting this product out there and globally imprinted in the credit marketplace.
Fabulous. And it's wonderful to have your insights, not only for having seen a market opportunity and as you say, some of the frailties of the market, and then also to have gone through the journey of setting something up, bring it to mind. Now, of course, I have global expansion as well. So it's wonderful to have you with us. I have to recognize the saddle because otherwise the audience will see it. I love that. Can I just say that's my favorite shot of all the webinars I've ever hosted. So thank you, Joanne. Wonderful to have you with us today. Julie Avad, can I ask you to do the same? Would you please introduce yourselves to the audience?
Hello, everyone. Good afternoon, and thanks for having me join the discussion today. I am a director in the operations division of PGIM Fixed Income, and I've been with the firm for a little over 5 years. PGIM Fixed Income is Prudential's global asset management business, and we currently have about 900 clients and approximately 960 billion assets under management. And in my current role, I head up the solutions team, which is responsible for shepherding technology-driven initiatives, driving transformation efforts, and building relationships with some of our technology partners. And my main focus right now is on modernizing our operations workflows and identifying opportunities for process improvement, specifically through automation. And I'm excited to share some of my experiences helping PGIM transition to working from home over the course of the last year, especially given the lasting impact that I think it will have going forward. And I'm hoping that in many ways we can emerge out of this lockdown better than when we started and take some of those, technological advancements and lessons learned along the way with us into the future.
It's been wonderful. And of course, working in organizations such as that and going through transformation and change, you make these comments lightly, but of course it's technologically very complex to do. So thank you. I'm looking forward to hearing your thoughts about transformation, change, automation, as you were saying. Thank you, Julie. Wonderful. And last but no means least, Darren Pierce, welcome. Love to again ask you to introduce yourself.
Sure. Well, first of all, good morning, good afternoon, good evening, and thanks for having me. I'm quite unusual in this setting in that I'm coming towards the end of a 20-year career with BNY Mellon. I officially leave on the 30th of April. But in that 20 years, I've spent a lot of time servicing the asset management industry, looking after some of the world's largest, most complex asset managers. And as we went into lockdown this time last year, I was running a very large business, over $1.5 billion of revenue, looking after the most complex fund ranges and asset management arrangements across Europe, the Middle East and Africa. And the focus through that first stage of lockdown was really connectivity and communication with our clients. And that changed over the first couple of months of lockdown, but that immediate focus was really about connectivity. And then we moved into what became a new normal, a different frequency of communicating, a different medium, and we're using it today of communicating with our clients. And I think we've learned a lot through that period, and we'll reflect on some of that this afternoon.
We certainly will. And that's actually going to be my first area of questioning. But before I do that, I say my first area of questioning because I don't want to be the only one asking the questions. So to all of the audience who have dialed in, you'll notice on the platform that we do have a Q&A function. We invite you, please, to post your questions, which I will, with pleasure, not only put to the panelists, but I'm also going to invite in a couple of colleagues from JPSB who are going to join us. Felicia Sussman, who's an associate partner, she's going to join us, along with Keith Wright, the chairman of JPSB. So when we get to the Q&A a little later in the conversation, they will also reveal themselves to the audience and participate in Q&A. So by all means, ask them a question or two as well. So now let's get into that. Darren, you were talking exactly about that, about, the challenges, and also I'm keen to get into the learnings of the pivot as we go into COVID-19. And I suppose the two or three kind of key areas, and then I'd love to hear your kind of thoughts on this. First of all is, what impact did the need to pivot have upon your business? And then also thinking about what impact has it had on meeting, maintaining or nurturing client trust? And if you were to have a lockdown legacy, what might that be?
So I think the first thing I'd say is, we went into lockdown with very strong established relationships in place. And so it wasn't a huge challenge for people to switch away from face-to-face meetings and start relying more on video and the telephone. But because those relationships were in place, those networks were in place, we're all used to talking to our clients all of the time, we just switched the medium away from face-to-face. We switched the medium from which we were having that communication. And the immediate impact was actually a step up in connectivity to our clients and an improvement in that connectivity. And in fact, we were hosting webinars and weekly call-ins and sort of various virtual events. And we saw a significant uptick in attendance rates versus the prior year. I chaired our client advisory board. We typically get 30 to 40 people that attend those meetings in person. Because they didn't have to travel to them, we saw the attendance double in some of those events. So the flexibility, the lack of travel involved in dialing into these virtual events actually enabled a better communication. So the immediate pivot was actually not particularly difficult. Our institution, BNY Mellon, and I'm still talking as an employee here, was not one which had a high degree of work from home expertise. We were a firm that was 95% in office as a norm. And we had to pivot in a 3-week period to being 95% in office. We switched to being 95% work from home. And we accomplished that in a 3-week period. It involved delivering 20,000 pieces of IT equipment, and that all had to be configured before it was delivered. So it's an enormous effort by our IT guys, and a big change in how we operated our business. We did it really, really successfully. We didn't miss a single SLA for any of our clients through that period. And we came out of particularly that first phase, call it 6 weeks, 2 months period, feeling very, very proud and feeling very strong and very connected to our clients. So I wouldn't say that first pivot presented a lot of challenges, particularly for the business leaders and the client-facing folk like me. I think the challenge comes as the lockdown, as this work from home, continues. We're a year in now. BNY Mellon is not inviting any additional staff back to work until September. So that will be a full 18 months since the call to work from home was made. And I think some new relationships are quite challenged from what I can see. So I think where in that first phase, we're able to rely on very established relationships that have been built over many years, lots of trust invested in. When you're trying to build new relationships that you can't foster in a social setting in any way, that's strictly through cameras and on phones, the relationships aren't as robust, they aren't as meaningful. And I think that's where we'll begin to see some strain, and actually at the same time will present some opportunities as we return to some form of normality. And I'm sure we'll come on to talk about what normality might look like. Mm-hmm. The only other comment I'd make, an observation I'd make, and comment a lot of my colleagues have shared with me, is they feel the intensity of their day has stepped up. Whereas they used to say, come in at 8, work till 6 or 7, but they'd get bio breaks, they'd go for lunch, they'd meet people at the coffee machine, there would be movement between offices and floors and maybe, taxi rides where you could catch your breath, do some email, think about what's next. The day that gets lined up now is a video, no breaks, straight from one to the next. And there's a new type of burnout. People are just sick of seeing their own faces and indeed probably other people's faces on video screens. So, you've got some creativity coming in, like video-free Fridays is quite a common thing that's catching on now, where people don't have to get out of their sweat clothes or their running gear to get onto the video on a Friday. You're allowed to leave the camera off all day. So, we've got to think about what kind of flexibility will we allow as we begin to return to the office and create that new normal.
Yeah, absolutely. And what I love about the fact is that in the opening remarks, as you've talked there really about sort of the human aspects as much as the technology aspects, which is really important. I mean, Julie, you were nodding around, nodding away when Darren was talking about, kind of the back-to-back calls. I think we all were actually going, yeah, that sounds familiar. And so talk to us about your kind of COVID pivot. And again, it's a similar question really, is what impact has it had upon, maintaining clients' trust? And when I say clients, obviously I'm thinking maybe in your case, internal clients as much as external. And then, what might be your lockdown legacy?
I think, similar to what Darren was saying, we also weren't necessarily prepared. Most of our workforce was working primarily in the office. And even though we've been operating this way for over a year, it's easy to forget what a fire drill this really was. And so when we needed to pivot to working from home, we needed to quickly adopt new communication and collaboration tools, leverage Teams channels, video conferencing, SharePoint, and things of that nature. And that really helped to break down barriers in communication and allow us to communicate in new ways. In some ways, it actually made it easier to approach someone you may not have worked with before, because the casual nature of sending someone an IM versus waiting to meet them in a formal meeting allowed you to kind of branch out and establish new relationships. And, some of the challenges we face just due to the nature of having to roll things out very quickly, forced us to kind of modernize and begin to communicate in new ways. So some examples of that are, we needed to improve the way that we remote into our work machines in order to increase the speed, just to improve the video and audio quality that we were experiencing. We needed to lift some restrictions that we had in place for our employees from accessing some of these applications on their mobile devices. We needed to lift the permission to print from home. Some of the other tools that we rolled out to help support this new work from home model included things like soft phone, which allowed your work calls to be forwarded to your home phone number. And for those who needed to use a recorded line, it would help to record those calls. Another thing is no one really had a printer, scanner, let alone a fax machine at home. So we rolled out an application called Fax to Mail, which allows you to email a document to a fax number, and it would fax it on the other end. And given the nature of our business, especially in the operations space, we do rely on faxing instructions to custodians for a number of different processes. So this was crucial to continuing to maintain our operations. And the other main tool we rolled out, which was extremely significant and helped us to kind of digitize the way we do things, is DocuSign. And allowing us to apply electronic signatures to documents that we would traditionally print out and pass around to collect everyone's signatures really allowed us to operate in a more efficient manner, and also gave us more comfort around the controls. One of the reasons we did choose DocuSign is because it allows you to authenticate so that the recipient of the document has to put in a special code that they receive via text or phone call before they can access that document and sign it. So that's definitely going to have a lasting impact on how we do things going forward. And then in terms of client trust, from an operations perspective, one area where we increased our oversight significantly was around monitoring for trade errors and tightening our controls around that to ensure that those don't increase, especially as trade volumes were spiking last year. And I worked on a project to help automate some of the metrics reporting around trade errors to give senior management instant access to any trends, the reason behind the errors, so that they can quickly act to introduce new controls or tighten our compliance rules around some of those trade errors to make sure that we maintain our client trust, especially in this new environment. And I think the key takeaway or the key learning for PGIM is that while the future is definitely going to be different than the current operating model today, we never are going to go back to the way things were pre-COVID. And I think that the genie is most certainly out of the bottle. I think it would be short-sighted to expect things to completely go back to the way they were. And there's been a lot of trust equity established, not just with our clients, but with our employees as well. And I'm afraid that we may be at risk of losing talent if we rush to go back to the way things were and not provide the flexibility that some people have grown accustomed to with working from home. And I think that we also came out of this very proud and feeling very strong. And I think that this has demonstrated that the whole asset management industry as a whole is capable of thriving in a less traditional environment. And we should keep that in mind as we go into the future.
Wonderful. Julie, thank you so much for your comments on that, and to talk about, some of the transformational changes, which are in some ways kind of incremental. For example, the kind of email to printing and the fax, email to fax sort of point of view. We forget actually is how much we still use faxes and also wet signatures, particularly when communicating with custodians. So it's wonderful to get that kind of depth of insight, as well as to think about the speed and the scale of the transition as well. So thank you very much indeed. So Joanne, let me bring you in here as well. So it's your organization. So you have, again, a wonderfully different point of view as well. Again, similar question, which is, how did you pivot? What impact did that have about the context of trust? And then also, what might be your legacy?
Well, what I think is interesting is that the comments as far as the practical, what you dealt with technologically, how you enhanced communication, how you just managed the day-to-day are very, very insightful with regard to my co-panelists here. For us, we're far more of an entrepreneurial organization. And as a result, the human element was far more central to what we saw as far as the application and the impact of, being locked down, suddenly not being able to travel, suddenly being in a very different environment as you work to build the trust with new clients, with launching new products, with introducing new concepts. And it's a double-edged sword, because what I found very interesting was that in some respects it was crippling. We went from having face-to-face meetings constantly and building that personal rapport, day by day, meeting by meeting, visit by visit. And suddenly you found yourself in a situation where there wasn't that continuity of contact. And that was at the onset very difficult to manage. But what I found interesting is it went on and people began to realize on a human level that it was okay for, it was okay for somebody to see the saddle sitting behind me, right? I mean, it was okay for somebody to get the insight and have, your granddaughter or grandson or son run in the room and have some discussion with you while you're in the middle of a meeting. Now, that changes the dynamic radically with regard to building trust and building an understanding of who the other person is, far more effectively than sitting over a business lunch. You get a lot more insight as to what makes that person tick, what their motivations are, what their thought process is, what their priorities are. And, I personally, once we started to make that adjustment, I started to see that the relationships built faster and they built more comprehensively and more on a well-rounded basis, because you had a look at the person in a setting other than sitting in the conference room at the office. I mean, we all have that face that is your business face. And when you have that face, but you have a background that's the rest of your life and they can see it because you can see it on a video screen, it's invigorating and it's a freeing type exchange. So yeah, I wouldn't wish the last 15 months on any business environment again, but it certainly does change how you view people that you deal with, because they're real people now. Now they're not the person that you had to go into the big office building and, get ushered past 3 secretaries in order to say hello. And again, being an entrepreneur and always having been an entrepreneur, I value that interconnectivity, that interrelationship, I think even more so than the titles and the environment.
I do think it's interesting how we become much more accepting of the barking dog in the background and the child appearing ready for bed, or you go back 18 months, a barking dog in the background was, typically, more than frowned upon. That would be
Yeah.
So you're not in the office today. What's going on?
A small child, for example. Exactly. No, I think it is really fascinating when we talk about, the COVID-19 pivot is, you've very much sort of talked about this for the human point of view as much as we have also from the technological point of view. I wonder if I could just kind of move the conversation on almost like kind of one notch, if you like, and get into the technology dynamic as well. Because clearly technology has an enormous role to play, as we've alluded to, so taking some of the legacy learnings, if you like, through COVID into what the future may look like, as well as fast transformation along the way as well. I suppose my question is, when you think about your technology investments in 2021, what are you particularly looking at the moment? And Joanne, can I stay with you on that question? Come to you first of all.
Yeah, absolutely. And it's a very timely question, as a matter of fact, because we're actually embarking on a massive build out, technological build out of new systems and new protocols with regard to managing not only the company's growth, but the ability to manage, again, the client connectivity. And I don't mean via Zoom or Teams or whatever else. I'm talking about what really has become apparent. We're in credit. As a result, you get into things like AML, KYC, KYB, critically important. There is an expectation that there will be, for some period of time, continued distance between you and your clients. Therefore, the technology that you build and the technology that you implement has got to address the ability of knowing that who you're dealing with online, who you're dealing with through your technology platform, is indeed the party that they say they are. And that was always important, it goes without saying, but even more so because you don't have that ability to actually have them, with a tremendous degree of alacrity, show up in your office and check everything about them before you, go on to the next chapter. Oftentimes we're onboarding new clients and we've never physically met that client. So what are the checkpoints? What are the diligence points? And as a result, I'm ashamed to say, or proud to say, I don't know which, that I become way too cognizant of KYC protocols, AML protocols, and exactly how you do identity management with a bunch of brainiacs around me that are fantastic at it. And basically sit down and say, Joanne, if we're going to do A, B, and C, we have to do 1, 2, and 3 first. And that is, strip everything else away from, the various components of technology. Now more than ever, you have to know that who you're dealing with online is who they said they are, which means that next generation KYC, KYB, AML has got to mature. This whole whitelist, blacklist type structure that's been the historical, not a good way to go. You got to be able to essentially create what is a big data driven tiling, if you'll excuse the parlance. You have to be able to build the background so that, for example, if I'm looking at Darren here on the screen, I can look at all the things around Darren and say, based upon that picture on his right and the other picture on his left and the lighting in the room and what his current IP address is, it can be nobody but Darren if you blacked his face out. You'd be able to tell it's him because of all the other data points around him, that it could be nobody but him. That's the type of KYC, KYB, AML that has to be implemented in order to know. And again, that's using big data, in my opinion, in the right way. That's the ability to know that it's really Darren.
Yeah, and if you begin to break that down, I mean, that's a confluence of facial recognition, even though, of course, we were talking about sort of blanking out the face, but all those different data feeds that come through APIs and different data sources that all combine and converge, which is really, really fascinating. And then, of course, my mind is whirring with when you begin to drive that upstream and downstream in your workflow processing. Actually that could really enrich some of your insights in some of your trading decisions as well. Really, really interesting. Joanne, thank you so much for your thoughts on that. Darren, what better prompts?
Yeah, I mean, that touches really nicely on the observations I was going to make. I'd say there's really 4 areas of focus looking out 21 and 2022. Companies continuing to accelerate their digital journey and investing massively. Again, BNY Mellon, digitizing absolutely every aspect of the client relationship. Joanne just touched on one where it comes to sort of connecting with individuals and recognizing them. But the digitization of the whole custody and the value chain around investment. Second point, and this really does build on Joanne's point, is the focus on what are your data assets. I think there are still asset managers out there that haven't got their own data mapped, and that's kind of an essential step in the digital journey. And so really understanding what data do you have, what are our unique data assets, what are those which are special to us in our investment process, what are those that we can buy from third parties, and what are those that we absolutely need to own, control, and secure so that we can maintain our competitive advantage. And that's an enormous program for some organizations that aren't starting from a good place. I want to say they're not starting from a good place because they probably got some pretty closed old legacy technologies that they haven't opened up and they haven't been architected, if that's a word, for that kind of data transparency that's essential for a 21st century asset manager. think the third thing would be, it'd really be a mistake not to mention, and it doesn't really play massively into our discussion, but this focus on ESG. You cannot have a discussion with any client or asset manager without making sure you understand their ESG agenda, and that your solutions and your proposals and your work programs take into account that ESG focus, because that is everyone's number one priority. And then the fourth thing I'd say, and this does anew to the conversation we're having, is the willingness of people to partner in a way they weren't willing to do perhaps 18 months or 2 years ago. We've seen an enormous pivot from the big banks, from the asset managers, from the brokers, from other service providers to collaborate, partner in ways that they simply weren't willing to do if you go back 2 years. And BNY Mellon's a phenomenal example of that. Our whole ethos was, we can do it ourselves, everything. We wouldn't buy in temporary talent or work with consultants or partner with IT firms. We believe we could do everything ourselves. We were big enough and well-funded enough to do everything in the investment lifecycle and everything in the technology lifecycle ourselves. That, I think we are incredibly typical in that mantra is dead. And now we look at what do we need to do ourselves to maintain competitive advantage, and where can we partner to either get there quicker, get there cheaper, get there better. We don't have to do it ourselves anymore. And I don't know whether that's because of COVID or a happy byproduct or just coincidental, but that certainly is the mantra I hear from both clients and internally at the bank.
I'll go with happy byproduct on that front. I would agree.
Yeah, and of course, everybody's talking about collaboration. Everybody's talking about, platforms and APIs. And the key thing is, how do you get it all working and singing beautifully, sort of from end to end? Exactly. And I think your points about data are really fascinating, because it's partly about, the collation of data from different sources, as you were saying, but it's also about the governance and then also the distribution and be able to mine the data. Because once you get all that going together, you've
got to know what data you have before you can mine it.
Yeah, fascinating.
That's quite a big undertaking for some. Yeah. I think one other comment is just, I think, stock markets, considering what we've been through in the last 15 months, stock markets have been pretty kind, and the last week or so, we've seen some all-time highs in various markets. So you've got an incredibly benign backdrop to what has been an incredibly challenging period. And having that benign backdrop actually buys asset managers time. It means their P&Ls are pretty robust and they can afford to invest in technology. They can afford to do these programs of work. And I think they're investing to get to the right place, which is terrific.
Fabulous. Well, Julie, I'm very keen to hear sort of from your point of view as well, because obviously the automation, as you were saying in your opening remarks, very much sits under your purview as well. So it's a similar question really, which is, what are you particularly focused on in terms of your technology investments in 2021?
Well, I think our focus right now lies mainly on investing in new cloud-based SaaS tools that help us automate our manual processes. We found that some of the work and the maintenance and support required to support some of the legacy on-prem solutions that we've had in place over the years is not necessarily worth it, or it does not necessarily justify the difference in cost. So right now we're looking to kind of offload some of that by bringing in technology partners, particular cloud-based solutions to help us find new innovative ways of doing things. The high trading volumes that I mentioned that we experienced last year actually put a lot of stress on some of our operations teams. There was even a point in time where we were reallocating some staff into different teams to help them support the large volumes that they were experiencing, just so that we can continue to support our clients and all of our workflows. And that definitely raised awareness around the need to be able to scale without necessarily increasing headcount. And so this actually shed a light on the need for bringing in new automation tools and helped to kind of add the momentum needed to get the approvals in place to bring on new tools that we're now excited to be implementing and looking forward to using into the rest of this year and beyond. And there are a number of different automation tools that we're bringing on to help non-technology, non-developers be able to self-serve in a way to kind of streamline some of the manual processes they have in place, such as, reading through bank loan documents and pulling data out, or managing corporate actions, events, to handling, paper swap confirms and things of that nature, things that are very time consuming and manual in nature. We're bringing in tools to help automate those processes and help to streamline them so that we can continue to scale and service more processes and more clients without necessarily increasing headcount. And then in addition, I echo Darren's sentiments around the importance of data. And we also struggle with, having data sources spanning a number of different sources that we have to constantly aggregate. And so right now, we're working on an initiative to kind of modernize our data warehouse to give both our operations and client reporting teams the ability to have direct access to data marts so that they can create and modify their own client reports on the fly, accommodate client requests in a more timely fashion, and be able to provide that sort of bespoke level of client service that, is one of the ways that PGIM likes to distinguish themselves in this space. So I think our main focus is now around data quality and automation tools. And I think in terms of, business continuity, one of the things that we'll have to think about in the future is perhaps coming up with a new backup plan to our backup plan. For example, if we plan to have a significant percentage of our workforce remain working from home, we'll have to think about things like, what would we do in the case of, a blackout, for example. Not everyone has a generator in their house. So the reason I'm smiling is, in true 2020 fashion, we actually experienced this last year in the tri-state area, where we had 3 days of no power, and not everyone was willing to go into the office, nor would they be able to if we don't have the space for them in the future. So there are certain, strategic decisions that still need to be made, and certain things that are already in motion thanks to COVID, and that will help to bring our business into a better place than it was before.
It's wonderful. Thank you so much for your remarks on that, because it is interesting. I've talked to a lot of people about, it's been I've had an opportunity to not only stress test your BCP plan, but actually then to go, well, what have we learned? And actually, where are the new scenarios? And as you say, you've just set out a couple there beautifully. So thank you for that. I am mindful we've got lots and lots of questions coming in, which I have to say, as a host, is an absolute joy to see. I just want to ask you one question. I'm going to ask you, each of you could just 1 minute maximum, and then we can get straight into questions if we may. But I would like to know what we're at risk of overlooking. And Darren, I'm coming to you first.
Yeah, it's already been mentioned. I don't know if we're overlooking it, but I would just say the risk is we underplay the talent challenge, and I'd include myself, being pretty typical here. I'm someone who worked 38 years in the corporate world, had a taste of what it's like being at home with the family, and have taken the opportunity to say, I'm not going back ever to how it was. I'm going to have a different life for myself. So you're going to lose a lot of corporate knowledge and all that history and connectivity with existing clients. And you've also got that challenge with new starters and in embedding the culture of the organization and the history of the organization with new starters when you're working the way we are. But I'd say I'd just encapsulate it in there's a talent challenge.
Yeah, and that actually chimes very much with some of the questions coming in about sort of the human resources kind of point of view as well. But Julie, can I come to you next, actually? Just very quickly, if you would, what are we at risk of overlooking?
Sure. Well, I think we've been operating in what is essentially, business continuity mode over the last year. And typically when these plans are put in place, there are certain trade-offs or concessions that you're willing to make to work under a BC setting on a temporary basis. So I think that one thing that we'll have to pay close attention to is revisiting some of our policies, some of our system configurations as we kind of adopt this BC mode as perhaps our new normal going forward. So things like policies around document retention, data security, cybersecurity, certain restrictions that have been lifted certainly need to be revisited. A perfect example is when we were first transitioning to working from home and needed to be able to remote into our work machines, they needed to be on at all times. And so we had to mute some of the automatic maintenance updates that were happening behind the scenes to prevent the machines from shutting down so that we could, maintain some of the macros that are running in the background at all times. So one way that we're going to address that is by transitioning to issuing work laptops for everyone going forward so that you have your machine with you at home and those updates can be pushed out at any time and you have full control over making sure your machine is turned on when it needs to be.
It's interesting, and people don't talk about that really very much at all. It's always tends to be sort of wide scale industrial, but actually it comes down to the laptop on the desk and the ability to do both, which is fantastic. Thank you for your thoughts on that. And Joanne, may I ask you the same question? What are we at risk of overlooking?
I always tend to look at things through the human lens, and I honestly think coming out of this COVID lockdown, the biggest thing that we risk is quality of life. Because when I say that, I'm talking about, Darren touched on it way back in the beginning of this discussion, and that is the inability now to have boundaries, to have moments in time which are homebound moments in time versus work time. Going video to video to video, working out of your home. What I've noticed, which is stunning to me, is how there has suddenly become next to no boundaries with regard to people's inclination to send you a text, to put a call out to you at 9 o'clock at night. There is no more boundary. And I think the biggest risk is that we don't ever politely reestablish those boundaries. And I think it's vitally important. I think it's incredibly psychologically unhealthy for people not to be able to take a step back and a step away from their work. And it's a plus and a minus. Working from home, again, if you're an entrepreneur, you know what it is to be on call all the time. But that's not normal for the vast majority of people. And that's something that I think is going to be a risk that cannot be nice and elegantly reestablished.
Yeah, absolutely. Thank you very much for that. And while you were talking, I was just looking through the variety of questions that have been coming in as well. So what I'm going to now do is invite Keith Wright, Chairman of JPSB, and also Felicia Sussman, who is the Regional Director of JPSB, to come and join us. So we're going to put the cameras on and remove their mutes. Wonderful to see you. Hello, Keith. How are you? You're currently on mute, but if you give me 1 second, exactly, we'll come on through. That's fantastic. And
available, yes.
Yeah, perfect. And Felicia, we're just waiting for you to be able to see you on your camera, but perhaps you could speak and we can hear you. Okay, well, I'm sure we'll get Felicia connected in 2 seconds. Now, lots of really interesting questions have been coming through, and I've sort of been grouping them slightly. And I want to start actually with the first question that came through, which I thought was really fascinating when it comes to how to tackle change projects. And when we think about the impact of the last year, do we see programs being broken down to avoid high-risk big change events, or do we have an appetite for large-scale change? Bearing in mind, last year we had to go through large-scale change. Julie, can I come to you first?
Sure. We simultaneously to having COVID happen, we actually changed our operating model and adopted agile ways of working. We've had a shift in our organizational structure. So I don't think that we're shying away from big changes. In fact, I think that this experience has shown us that we shouldn't shy away from big changes, and we're very much capable of handling them. And so, and also highlighted the need for some changes in order to kind of make sure we're prepared to handle something like this, or, God forbid, worse going forward. So we're very much driving forward with, making all the changes that are necessary to support our business, regardless of whether we're in the office or not.
Wonderful. Thank you very much indeed. And I'm very keen to get through as many questions as we can. So if you don't mind, I'm going to take them and then just sort of allocate them. But if anybody wants to chime in, by all means do. I do want to pick that up. So there's one question about the role of vendors, which we haven't touched on yet in the discussion, is all major vendors are accelerating their SaaS platforms. and driving to a hosted world, which again sort of builds on what Julie was saying earlier about thinking about the cloud conversation as well. And is that driving a best of breed resurgence? And also, Darren, thinking about your comments about collaboration, I wonder if I could throw this to you.
Yeah, I would say absolutely yes. Again, I don't know whether that's just a happy coincidence with COVID-19, but I think this trend to rely on cloud technologies and to work with partners to focus on your core differentiator, that just is it. That trend, whether it's technology, whether it's operations, whether it's your use of suppliers, it's exploding. And I'd say, you know, the SaaS comment's exactly consistent with every other aspect of our business.
Yeah, and of course that gives a lighter deployment. We talk about that challenge of bringing data in and also collaboration as well. So over a SaaS model, which is lighter, it would be would make a lot of sense, I think. Joanne, I wonder if I could turn to you for a human question. We're having lots of questions about the reality. In fact, you touched upon it in terms of our working days and our boundaries, but also the fact that actually, you know, we have to remember that different human beings have different personality types. And there's sort of one question that's come through about, you know, what about hearing some of the quieter voices? But also there's another question here, which I think is really interesting, if I could throw that in, which is, of course, now I've just lost it in the chat, but it was about aligning this point about ESG. And the fact that, let me just find it, if you bear with me 2 seconds, because here we go. So there seems to be a reaction amongst retail investors, and particularly the millennial market, against the approach taken by some institutions, and Goldman's is named and others have followed suit as well, enforcing a return to work policy. But also a conversation about enforcing a return to work policy and a movement to incorporate remote working staffing policies under the ESG banner, which is really fascinating. And at the same time, there seems to be a reluctance to put money into companies that are forcing return to work. And I just wondered whether your thoughts really were on, you know, should we be aligning the ESG conversation and also the return to work and also the appetite of investment to come into organizations that are revealing certain patterns? It's just a really interesting question. Thank you for that. Who put that in?
It is a very interesting question. And it's a difficult question. There's no question. The ESG orientation, the millennial orientation towards, again, quality of life being a priority more so than, I mean, I don't think of myself as old, but I'm older. And as a result, I grew up in a different era. I grew up in an era where you were expected to, you know, hit the ground running, go to the office, work your backside off, and your early years were going to be spent, you know, put it this way, the vast majority of your waking hours were going to be spent working, and then you'd fit everything else in. And it's a very different dynamic today. And I think the forced return to a workplace environment, I think, is not going to be very well received, especially among, you know, younger entrants into the employment pool. And I'm not saying anything that people wouldn't expect to be the answer. It's just a very different dynamic. And you see it from an investor's perspective, the focus on ESG, the focus on the human aspect of things, on making a better quality of life, on employing policies that are designed to aid businesses that are focusing on the person first rather than the business. All those things are all aligned, and they're all really the same thing. They're just different manifestations of the same thing. And I think, you know, truthfully, there's going to be, I believe, a whole segment of the market that, you know, holds fast to, I'm going to get the most productivity out of people if they are in the office and they are working, you know, and I can see them working. Something to be said for that. Whether that's the right course, I don't necessarily think it is.
I'd just add, sorry,
myself, I can't see how, if you want to really attract entrepreneurial talent, really you've got to allow them as much freedom under some basic controls that
Yes.
you can, because you know, that talent is very movable and very much in demand, especially in the new world that we are living in. And therefore, to accommodate them is the hardest piece of work that especially in monolithic companies, they can take on.
I was just going to add, I'm very surprised that these firms are focusing more on the outcomes and the productivity that's achieved rather than where the work was taking place.
Yeah. And I wonder if I could throw another thought in, because the world of consulting is also changing. It used to be you'd put consultants on aeroplanes and send them around the world, and are we going to return to that kind of a model where you need to have your consultant sitting next to you, therefore have to put them up in expensive hotels, and you think about the cost of consultancy, and just wondering whether there's in the appetite to have the right partners in the mix, whether that entire model is being challenged as well.
Well,
That's a question for anybody, but Felicia, why don't you come in here?
I think there's a couple of different perspectives there. I think one of the interesting perspectives in this time is, if you weren't partnered with a consultant and you need one now, how do you even establish that relationship when it's not face to face?
Right.
And the other is, if you do need to make a change, how are you doing that? And I think that how people have begun to look at how they're working with their consultancy has really grown and morphed and changed. And I think my experience and what I'm seeing, I'm curious to hear what the rest of the panel says, is I'm seeing people more and more reaching out and looking for consultancy and needing guidance, particularly in this time. A lot of things we're seeing is that people they've got a lot of legacy infrastructure that they've let sit over the last 18 months because there were clearly other priorities, but now that's coming back to haunt them and they need to revisit that.
Yeah. Well, I think that sort of builds on the comment that Julie was making earlier about not so much about legacy, but certainly about taking stock almost in that conversation. I mean, Julie, I didn't really want to add anything there in terms of, you were talking about taking stock in terms of BCP, but also, I mean, the legacy question must pervade through all organizations, not simply your own.
Yeah, and we've actually invested heavily into, increasing our technology organization, both through full-time staff as well as through consultants, to help kind of support us through this journey. So I absolutely think that your insights are echoed throughout PGIM. It definitely is similar to the path that we've been taking. And it's definitely a process and isn't going to happen overnight, but there are so many technology partners out there that may do things better than we can internally. And we're looking to leverage the right tools for the right processes as much as possible, regardless of whether we're bringing in an external partner or being innovative and building it internally. We're open-minded and we're constantly analyzing the best solution for the job.
Great. We've had another question come in about, in the context of moving to an increasingly digital world. Of course, we are seeing, and there are existing and enormous opportunities in digital asset classes as well. Love to hear the panel's view about, your thoughts about what that future may hold. Is it too much? Well, let me expand on the question a little. I don't want to misrepresent it. So whoever asked the question, forgive me if I take a little bit of license with it. But part of it is, there are some institutions for whom it is too risky to get into cryptocurrencies, digital assets, and for others who are really taking advantage of that. Love to hear the panel's sort of thoughts on what potential does that hold and what are the risks surrounding that as well. Darren, can I come to you first of all?
Yeah, sure. So, when you look at cryptocurrencies, they're quite alien to an institution like BNY Mellon, but we also recognize it's something which it's essential that we have capabilities around. We're used to working in a highly regulated environment with government controls on liquidity, the ability of regulators to clamp down on behaviors. Now, when you start going into the crypto space, all of that regulatory and governance and government control disappears. So there's an audience for cryptos, but it's an audience which I'd say is still relatively immature. It's embryonic. The big banks don't want to miss out on it. And you've seen lots of announcements and initiatives that we're all participating in. But at the same time, our core client base, the sovereign wealth funds, the big established pension funds, the big fund families, they're not taking exposure to cryptos yet, but everyone's looking at it very intently. So I'd say you have to be in there exploring it, testing initiatives, participating in all of the very latest groups that are forming, But at the same time, it's a fraction of 1% in terms of what it does to your bottom line right now.
And it'll be interesting to see where the growth is and where there might be flare moments and there might be consistent change, or where that emerges. Really, I'm just going to open this up. Welcome any other comments. Keith, by all means,
I was
please.
going to say that I think that really the acid test is when we start to move from what is a digital entity to a proper asset-backed cryptocurrency. So I think that's where the game changer will come, that it has to be taken more seriously. If you had a major player, be it with gold or with oil, who launches a cryptocurrency with proper backing, I don't think you can ignore it anymore. And it has to, as soon as it falls into the regulated world, then the world changes.
I couldn't agree more. It's that lack of tangible value, which continues to be a huge hurdle to overcome.
Yeah, Joanne, you're nodding along. Is that this? You're obviously agreeing with the panelists. Anything else you'd like to add, or any points of view?
I completely agree with everything Keith and Darren just said. And I actually find it interesting because cryptocurrencies and digital assets in general, I think the value there, or what has been the value thus far, is the underlier, the blockchain technology that enabled it. That innovation is something that is relevant across countless industries. And in my opinion, right now, and I'd echo Darren's comment that right now it's embryonic, but Keith is absolutely correct that when it gets its legs under it with tangible assets associated with it, it's by far going to be one of the most interesting journeys as far as an investment journey in probably 24 years. But at the end of the day, what has been the contribution to date is the technology that makes it possible.
I couldn't agree more. I mean, the distributed ledger, as you know, and the use of it is embedded now in really fundamental processes in the value chain. But your question being around cryptocurrency, no, it's not cryptocurrency. It's some of the underlying technology principles which are really adding value.
Yes.
So I can't help but feel we've got to have a webinar on that alone, as well as ESG alone, as well as many of the topics we've covered. I just want to say to everybody who's posted questions, I wish I could have come to all of them. I hope what I've done is select some that's kind of have groupings, natural groupings around the nature of the questions. We didn't get it sadly in time to have a chance to talk about commercial property and what that's going to look like in the investment world in time, nor indeed the whether or not the auditors can keep pace. But sadly, we just didn't have time. Darren, Joanne and Julie, thank you so much for your thoughts. Keith and Melissa, it's great to have your input as well. I'm now going to invite onto the platform the founder, Kieran Bogle, founder of JPSB. Kieran, I don't know, you're lighting your camera as we speak and switching off mute. I'm going to hand over to you for closing remarks.
First and foremost, wow, absolutely insightful. Some great comments. For me personally, and where JPSB have grown as a company, what has resonated thoroughly is the idea of how we've humanized the whole process over the last year, 15 months, wherever we are today, is the biggest litmus test we've ever faced, and how we've responded to that, not only in our own industry, but you can look at the scientists out there who've created a vaccine in 1 year. So that's been absolutely, I'm in awe of that. Points I've picked up, looking at the year, I think having the established relationships has really worked for us as an organization, that we've built upon that. So it gave us a good sort of staging post to build the business over the year. However, going to Joanne's comments, there is, the workday has increased. Where it's blurred. From my perspective, definitely, where we should be switching off and doing something else at 6:30 with the family. More often than not, I'm in a conversation which is work related. So those blurred lines, as much as productivity has gone up, we also feel that it's created another issue, and that's more around sort of your mental health. So that to find the balance is going to be the key. And I think where I see that is going to be through what I call compassionate leadership. And that's going to be key. I don't think the whole idea of going back into an office, wham, bam, thank you, ma'am, is going to work. I think it's going to be choice, very much so. And there'll be people who want to stay at home and they prefer that. There'll be guys who want to go back into the city or into their environments. So that they're my sort of, underlying it. It's really about the human side of it and managing that process and taking on the great comments by the panel. So I'll definitely, and those really underpin, us as an organization. If you look at our core, integrity, respect, and endeavor, they are real human traits. And that really should be brought into how we feel, the next step should look like. But look, I'm obviously mindful of the time. A few thank yous, if you don't mind. So first, Darren, Joanne, Julie, amazing. This is our inaugural webinar. Superb, and I can't thank you more. So a big thank you there. I'd like to thank you, Julia, and the whole Streets Consulting team for, putting us on the right path and making this happen. So, a big thank you there. Again, to the JPSB team, Andy, Keith, Felicia, Jody, Jacob, the sort of work they put into making this event happen as well, behind the scenes. And, how can I forget, the attendees who, have joined us today. It's the first of many, and it's with your support, we will grow and bring these topics to the forefront. And obviously, if anyone couldn't make it, I believe there is a recording, which I think we're going to push out to those who couldn't attend today. But, an all-round big thank you from JPSB.